Hello, happy holidays, Merry Christmas, good afternoon. We've got a wild ride here in the stock market this week on what's typically a little lighter week before the holidays. So we're going to break apart what's going on here. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends that we're watching, and hopefully weed out a bit of the noise along the way. Before we get into anything, again, I want to say Merry Christmas, Happy Holidays, Happy New Year. We'll be back next Thursday for our typical session as well. But this is the last weekly update going into the holiday weekend. So I hope everybody's able to, first off, stay warm, and second off, enjoy some time with friends and family. But this week has been a little bit of a surprise, I think is maybe a good way to put it. Typically, as we get into the holiday season, the week before and between, Christmas and New Year's is really, really slow as far as trading goes and activity. So far, here we are on Thursday. This week is not that, it's quite the opposite. So we'll talk a little bit about some numbers and then what's, kind of transpired based on that. And maybe to start out, I'll share a little bit about housing data because I think that has maybe the least impact so far anyways on what's going on this week in the markets. But housing data has still been pretty soft coming out, I think, starting last Friday and into this week. We've got some housing data. And really most of that came in was not the greatest. So still showing some challenges with the housing market to some degree. Again, for us here in the Seattle area, it's maybe not quite as pronounced, but across the nation, there definitely are some challenges that we're seeing on the housing front. Fast forward to just yesterday on Wednesday, we had consumer confidence numbers come out, and they were much, much higher than expected. And we saw a huge update in the markets. Markets took off. It depends on which index you were looking at, but over 2% depending on where you were looking as far as the day goes from open to close. So really strong day in the market yesterday. And then we fast forward to today on Thursday, and we had initial jobless claims come out and a GDP revision come out higher than the last read, actually. The initial jobless claims were basically in line with expectations, maybe slightly below, but basically in line. And we saw a huge down day today. Now, here we are, end of the day, it pulled back, it lifted back up a little bit. But right out of the gate, we saw the markets take off quite a bit, basically give up all the gains from the day before. And again, it kind of carried out throughout the day. Come, lunchtime or so, the market started picking up again. So it didn't close nearly as bad as it seemed in the middle of the day, basically. But yeah, interesting to see this giant swing again on what typically is a much calmer week of market activity. The volatility has been high. The volume has been high, and the market swings have been just as crazy. So yesterday, Wednesday, we had markets up big. Today, Thursday, we had markets down big, give up a lot of the gains, and again, kind of tread their way back a little bit towards the end of the day. So we'll see what comes on Friday. Again, I typically would suggest that the markets will be slower, but with what we're seeing so far this week, we will find out. So stay tuned tomorrow, obviously, the last day of trading before the holiday weekend. And keep in mind as well that come next week on Monday, the markets are closed, okay? Markets are closed for Christmas observation holiday on Monday, the 26th. But before we get there, we actually have tomorrow could be another day of activity because we actually have inflation data coming out. We've got PCE data coming out tomorrow, as well as income and spending. And then a quick reminder again that markets are closed coming up next Monday on the 26th. So we'll have a 3-day weekend as far as markets go coming up here. Before we get to the holidays, I wanted to share a question of the week, which is about year-end strategies. And I think this is a really good one. I want to thank Mark for reaching out with this question. We talk about year-end strategies a lot, and I thought what may be helpful based on this question is to kind of compile them all together. So I'm not going to get into a lot of detail on each of these, but I'm going to touch on 4 year-end strategies that we can all take a look at and consider. Here we are, December 22nd. We don't have a heck of a lot of time before year-end, but regardless, if you haven't looked at these, you may still have an opportunity. So it's worth taking a look. The first is tax loss harvesting. So this is really important for those who have investment accounts outside of retirement. Especially in a down year like we've seen this year, you may have some positions that are actually down right now from your cost basis. So what you can explore is potentially selling some of those positions that are at a loss for tax purposes. Now, you don't want to just restructure your portfolio just to restructure it. So there's a lot to this that you want to consider. But if you do have some positions that are at a tax loss right now, it's definitely something worth considering to kind of fit into the bigger picture. Second is Roth conversions. This is a little more common, but here we are, end of the year. This can be a great strategy, especially for those who maybe have lower income this year for whatever reason, or are in this kind of like sweet spot, we like to call it, where maybe you're retired, but you haven't started Social Security and your required distributions, I'll get to that here in a minute, haven't started yet either. So depends on when you retired, but typically that's somewhere, let's say 60 to 72 or 70 can be a really good time sometimes to explore these Roth conversion strategies. Third is charitable giving. So a couple of weeks back, I think just in time for Thanksgiving holiday, we talked a little bit about charitable giving, but this can be a really good strategy to, reduce your taxes to some degree and really start thinking about before year end, especially for those who may have a higher income this year than they're used to. And fourth is required minimum distributions. So depending on where you fall with the Secure Act and everything, let's just assume over 70.5 or 72. The IRS does require you to take money out of your pre-tax retirement accounts, your IRAs, for instance, or your 401ks. So definitely, if you haven't yet, take a look at that because the penalty for missing a required distribution is really steep. It's 50% of the required distribution amount. So again, hopefully you've already caught this, but as a last reminder heading into the new year, if you haven't taken a required minimum distribution and you are over 70, you definitely want to take a look and see if you do need to take some money out. And if so, make sure to get that squared away. A bonus kind of year-end strategy for those who may have a few of these tied together. If you find that you have required distributions and you're considering charitable giving, sending your required distribution to a charity, it has to be 501c3, it has to be legit. But if you do that, can create a lot of opportunities as well. This is the first year back to the old charitable giving rules, and so we don't get the full deduction on our contributions, our cash contributions. However, if it comes directly from your IRA or 401k to a qualified charity, what happens is you actually skip it really hitting your income statement, so to speak. So you can give it directly. It never shows as an income from a tax perspective on your side of things. It can really help out a lot for those who give in the first place. So I hope that's helpful. Again, top 4 things are looking at tax loss harvesting, Roth conversions, charitable giving, and required minimum distributions. So thanks again, Mark, for reaching out with this question. We'll see you guys all next Thursday at 3. So let me know if you have any questions, but more importantly, enjoy the holidays. I hope you're able to relax this weekend, and we'll see you back next Thursday at 3 p.m.